if we took the log of the price divided by 1274 and set it to 1.03 in the short term, then that means that the valuation of Ethereum could theoretically go to over $3,000 and still maintain the integrity of the idea that the extension from the 20-week should diminish each cycle. Now, I'm not saying that Ethereum's about to go to $3,500, right? I'm not saying that, but I'm saying that it could do that and it still would maintain the integrity of this model.
BitSwap is the hottest new way to trade tokens. Crawling all the top decentralized exchanges, BitSwap gets you the very best price and value for your trades. BitSwap is changing the game. Try it now at bitswapdex.io. Welcome to BitBoy Crypto, the largest crypto channel in all the interwebs. My name is Ben. Every day on this channel, I show you how to make money in cryptocurrency. If you like money in crypto, make sure to hit the subscribe button for your chance to win a full Bitcoin. Details down below. In today's video, I brought on one of the hottest and most respected YouTubers in the game with a great name, Benjamin Cowen. If you thought one Ben was enough, wait until you see two of them together. Ben has a unique way of presenting charts and information that's based upon data science. You know we love science on the channel. Today, we sat down to discuss the prospects of this bull market and just how much further Bitcoin can run. In addition, we also take a look at Ethereum's prospects to hit $3,500 in the future. All right, guys, let's go ahead and jump in. Hey, guys, welcome to the channel today. I'm very honored to be joined by one of the hottest YouTubers out there, Benjamin Cowen. He has done some really great technical analysis videos, and recently he's been talking a little bit about Ethereum. So welcome to the channel. And if you could just tell everybody just a little bit about yourself.
Yeah, so thanks for having me on. My name's Ben. I started a YouTube channel back in 2019, and I mostly focus on long-term analysis, macro trends in the market, and more, I would say it's more akin to data science as opposed to maybe like your traditional TA. And so that's sort of what my channel is about. And we mainly talk about Bitcoin, Ethereum, Link, ADA, and DOT is probably 99% of what I talk about on my channel.
Well, that's like all of my biggest holdings. So already sounds good to me. And guys, before we really get into the video here, you guys make sure, I'm going to put the link to his YouTube channel down below in the video description. Make sure you guys head on over there and subscribe to his channel. Show him some love. You know, we love bringing on TA guys and, hey, data science guys onto the show. So, all right, Ben, let's dice it up. Let's see what you got. Kind of what are you thinking in terms of what's going on with the larger timeframes here for crypto?
Yeah, so I think I have this model where this looks like the chart for Bitcoin, but actually it's the total cryptocurrency market capitalization chart. And what we notice is that while there are phases where we have expansions in the asset class and then contractions, we do generally trend higher. Right. And the red line is more or less our fair value fit to the total cryptocurrency market capitalization. So what this means is if we're under it, then we're historically undervalued. And this would be our, accumulation phase, right? Our accumulation phase. I know you were making a lot of videos during the accumulation phase as well. And so this is where the real money is made, right?
Absolutely.
Bull markets make you money, bear markets make you rich, because when you get in during the bear market, you reap the rewards of the bull market later on, rather than chasing the pump, right? You already have your positions. So when it's at the red line, it's at the fair valuation. And when it's above it, then we're historically overvalued. But that doesn't mean that we have to immediately come back down. We could stay overvalued for years before coming back down, potentially. And so this is the chart where I just like to show people, because I think it puts everything into perspective as to where we currently are within this cycle. We know that things are very heated right now, but if history is any indication, like 2017, 2016, we could stay overvalued for years before ultimately coming back down to earth for a little while. So again, this is the total cryptocurrency market capitalization. And one thing to consider, the peaks are getting less and less extended from the fair value each cycle, right? So this one went well above the upper green line. This one went basically right to it or right above it. And this one dropped right below it. So the idea is, well, it seems like it's possible this cycle for us to go up several more $1 trillion from where we currently are in terms of the grand scheme of the market cycle. Now, that doesn't mean it has to happen this year. I mean, I know a lot of people think it will, and it could, right? We could go up to those levels this year. But the main thing is whenever it does happen, it seems like it would be theoretically possible for us to move up several trillion more dollars. And the way to best visualize this, I think, is if we take the percent difference between the market cap and the fair value. This is the chart you get. Okay. Wow. What do you notice?
Yeah,
general macro downtrend.
Yeah, a downtrend for sure.
Yeah. And that doesn't mean that you can't make a lot of money, because I mean, if you're in crypto now, you're doing something wrong if you're not making a lot of money, right? I mean, it's, if you just get a position and hold it right now, you should be doing relatively well. Well, I mean, of course, short term is hard to say, but regardless, what you notice is that we're generally decreasing in terms of the extension from the fair value, right? So what I would be looking for is to say, I don't know if we're going to go straight up there this year. I mean, at this rate, right, if we keep going up at this rate, we'll get there in no time, right? You give it a few more months and we'll be there. Or, and this would be, say, the bullish scenario, right? Straight up to the top. A bearish scenario, which I don't think is going to happen, will be straight back down. And then there's other scenarios as well. And the main thing I want to take from this chart is to talk about the fact that there's a lot of similarities between this market cycle and 2 market cycles ago in terms of intra-cycle volatility, right? Yeah. We came down to the bottom right here. I don't really have a little circle there, but we came down to the bottom, back up to a little overvaluation region. This was our 2019 impulsive move that no one really believed at the time.
The fake
like everyone was sort of in disbelief, right?
Yeah.
And then we came back down and then back up again just to poke our head above the fair value. And then our final capitulation before blasting off. And so that's where we currently are.
And that blue, the blue, not to interrupt you there, even though I just did interrupt you, the blue circle right there, followed by the red circle, that would have been the pandemic crash, correct?
Exactly. Yeah. It's sort of, when everyone was hoping that it was about to just go up, it took everyone by surprise. And then everyone woke up and their portfolios were down 60%, And so there's a lot of new money today that don't think that's ever theoretically possible again. But I have news for them. A day of reckoning will come at some point in the future. I don't know when it's going to be, but it will come at some point. But anyways, what you notice about this chart is, well, if this part of the accumulation phase was similar to 2 cycles ago, what do you notice what happened next after that cycle? We had a double peak cycle, right? And so that's the thing is, I don't really know if this is going to be a double peak cycle or not. I mean, I think to some degree, every market cycle will have its own sort of characteristics, right? And be remembered, have its own personality. But if we did do something like that, we could have a double peak cycle where maybe we go into this major move there, or maybe we go up, 50% more or something. And then maybe we then have a pull back and then ultimately go up to the market cycle top. I think the key thing to take from this chart, whether you believe in a shortening cycle, a lengthening cycle, the 4-year cycle, is that I think time is on our side, right? I mean, it looks like time is on our side. It's just a matter of how long it takes us to get there.
Well, I would say, what's really interesting is you would think that $100,000 is going to be that mark where we get that pullback, right? Like $100,000 is such an unbelievable number for Bitcoin that there will be, and think about what level of profit people that got in before the bear market will be at. They'll be at a 10x for a lot of people that got in, around $10,000 or more. And I think that's a really good target to look at. A lot of people taking profits, and we might have something similarly to 2013 and 2014. I would definitely be a bigger fan of the 2017 model that's just up the whole time. That would be great, instead of having the 2 distinct cycles. And if you go back to the other chart that we were looking at previous to this one, the one that was right there. So kind of what I'm looking at there is, if we were to touch the top of the green dotted line there, that would put a $10 trillion market cap, which would put Bitcoin above $500,000 per coin. I think that most of us probably agree that that's not going to happen, that it is going to be somewhere closer probably to the $300,000 to $400,000 range. So I think everything you're saying makes perfect sense with a lot of stuff that, we've talked about on the channel, which is, maybe somewhere around a $322,000 Bitcoin for this cycle. We could have a blow off top that goes up higher. But if this is in line and we're seeing a continued downtrend, then I think about $300,000 to $400,000 would be probably about a good target based on what we're looking at here.
Well, one thing to consider too, though, again, is this is the total crypto market cap, not just Bitcoin.
Oh, right. Yeah, that's right. You're correct.
So yeah. So even if this did, and also remember too that the extension from the fair value is getting lower and lower. So this time we might not even make it to the green line, right?
Yeah.
Because last time we barely made it there. The time before we made it above it, and the time before that we were well above it. So I would agree. I think $500,000 Bitcoin this market cycle is a dream that's not going to happen. Yeah, like maybe next cycle. I think next cycle there's a much higher probability. This cycle I don't see $500,000 Bitcoin. And so yeah, like I don't necessarily know that the entire market cap will go to 10 trillion. I think it could go to 10 trillion the longer it takes us to get there, right? Like if the cycle is extended, we have more momentum over a longer period of time, I could see the entire asset class going to $10 trillion. But we also know that if Bitcoin did go, or if we did have a major, market cycle that had this amazing blow off top, if we had a major altcoin season akin to 2017, then we know the Bitcoin dominance could drop down to the 30-40% level. Now, of course, we have institutional investors today that might have something to say about that. And so there could be some differences in terms of where the dominance goes. But yeah, just remember this is a total crypto market cap, not just
well, we could also see some offsetting of the Bitcoin profits, kind of keeping the overall market capitalization around the same number. So Bitcoin goes way up. It goes, let's say $7-8 trillion. And then people take profits out of it and then just pile it into other projects. The Bitcoin dominance level goes down, but the overall market cap could stay relatively similar.
Right. We saw that in 2017, right? The Bitcoin's peak happened about a month before Ethereum's peak.
Exactly.
Like Bitcoin's peak was like December 17th and then Ethereum's was January 13th. So yeah, like that. And that's how the dominance can come down so far, is that people finally take their profits out of Bitcoin and then go gamble it on some other coins.
Yeah. Well, and I think I do want to touch on Ethereum with you here in just a minute, but I think it's a really important point. I had Michael Saylor on my channel for an interview. We like Michael Saylor. He's a great Bitcoin hero. He believes that we're not going to see the traditional Bitcoin cycle, that, we're going to break out of this and the price of Bitcoin is going to go up forever. And, he sounds very similar to someone who's only been in Bitcoin for a year. So for those of us who have been in this market for a long time, we've seen multiple cycles. The thing to keep in mind is we all pretty much say the same thing. Like anyone who has been in this market for multiple cycles, we believe there will be a blow off top at some point. There will be a bear market. And I just ask everybody to keep that in mind. And during the euphoria that happens during these market cycles, people tend to think like, oh, I'm just going to jump in and make money forever. But that's not the way the markets work.
Right. And I think that this cycle will be, I know a lot of people think like, I've seen December 2021 thrown around a lot, right? A lot of people think that, which means there's probably a good chance that's not what happens.
Yeah.
But we could have, if it is a double peak cycle like 2013, maybe we have a peak soon, and then we go into a cool down phase for a while, and then go on another run up later on. But yeah, eventually there will be another bear market. Yeah. That's just the way the cycles work. People are going to take profits, and at the end of the day, I know you and I and a lot of other people that watch the show like the idea of Bitcoin, right? But there are people that just want to make money, and if they're up 30-40x, like whatever, they're gonna take their profits and look the other way, and then they'll just go on to something else until the markets calm down again. So
yeah, exactly. It is like I tell everybody, crypto's about more than moons and Lambos. We like moons and we like Lambos, but there is a movement behind it. But the vast majority of people who come into the space, they don't ever get that deep with it. So they do just really look at the money. And, the institutions are not looking at decentralized internet and thinking like, that sounds great. So let's check out Ethereum, because it's been on a little bit of a run, recently, and we're trying to figure out, is it going to break up and break out? And you had done a video where you talked about, I think you did a really good job putting everything into perspective with Ethereum. Like I always have to keep reminding people, like Ethereum has outperformed Bitcoin this year so far. So while the last, few weeks have not been great, or the last month's not been great, it's still not in a bad spot. So what are the charts kind of telling us right now for Ethereum?
Yeah, so Ethereum sort of goes through these phases against Bitcoin, where when it's above this, so I have this thing called the bull market support band. I normally just use it for Bitcoin, but I think it's actually pretty prevalent for a lot of other crypto pairs. So basically, it's just a combination of the 20-week SMA and the 21-week EMA. And I'm sure you're familiar with those. It's just a combination of both of those. So whenever we're above it, everyone's super bullish on Ethereum, and it's like, Ethereum's the best thing since sliced bread. And then whenever we're below it, everyone's super bearish, and everyone says Ethereum is dead, and that all these other projects are going to take it over. Now, I would agree that a lot of altcoin projects will have higher ROIs than Ethereum, and that's why I invest in other projects. But I think Ethereum is a safer long-term play.
100%.
And And again, like it's riskier, right? I mean, altcoins are riskier. So if you realize a higher return, well, then you paid for that return with more units of risk, more volatility. Because if we do get that bear market, a lot of these altcoins will bleed more than Ethereum. So what I'm looking at with Ethereum right now is we're doing more or less the same thing that we keep doing, right? This little roller coaster back and forth. And this is a logarithmic scale. This is where I've basically had on my channel for like a year and a half saying this is our general reaccumulation phase of the Ether Bitcoin valuation. And if you look at, say, the linear scale, you can generally see we're more or less just moving up it fairly systematically. But I think what's more important is also looking at I think the Bitcoin valuation of Ethereum is the most important, but also looking at its USD valuation, because that is what a lot of people care about, despite the fact that I think its Bitcoin valuation should be considered more. But one of the things you can look at is our extension from the 20-week moving average, right? So this line you see here, the red line, is the 20-week moving average, right? And if we take the extension from the 20-week moving average, we get something that looks like this. Now, the best way to understand this chart, though, is to go look at Ethereum's big brother, Bitcoin. And how does Bitcoin's chart look for this? And that way we can understand what this chart's doing. If you go look at Bitcoin, you can see that everyone says this time is different, but the extension from the 20-week moving average for Bitcoin has actually always diminished each cycle so far, right? You do not see, and again, you do not see from any cycle, like this is our 2011 cycle, and then we had 2013, we had a double peak cycle here, and then 2017, and then so far here. So far, the extension from the 20-week moving average for Bitcoin has diminished each cycle. Now, this will break eventually, because this chart right here is, again, it's just a natural log of the price over the 20-week moving average.
Oh, so well, that's the math you only get with Benjamin Cowen.
Yeah,
I can't. I don't even know what that means.
So basically, but to give you an idea, right? If the natural log of 1 is 0, right? So if the price were the 20-week moving average, then it basically this chart would come back to be 0. So anything below this line at 0, if I can draw it, that's basically at 0.01. So anything below that line colored in red, we're below the 20-week. Anything above it, we're above the 20-week. But naturally, this trend has to break eventually. Otherwise, it would imply eventually we always are below the 20-week moving average. Yeah. So it will break eventually. But what do we know? We see diminished extension from the 20-week moving average. So go back and look at Ethereum. We don't really have a whole lot to measure. Yeah, but if we just say, okay, well, let's suppose that we have diminished extension from the 20-week moving average, and we're generally increasing here, right? We're generally moving up. And so the idea is, well, we could still go all the way up here and still maintain this model in terms of diminished extension from the 20-week moving average. So to give you just a brief extrapolation, a very dubious extrapolation, right? But let's suppose that we went up to a valuation of let's just say like 1.03, right? So this would be 1.03. But remember, this is with respect to the 20-week moving average. So we need to know what the 20-week moving average is. It's currently 1273. or 1274. So if we took the log of the price divided by 1274 and set it to 1.03 in the short term, then that means that the valuation of Ethereum could theoretically go to over $3,000 and still maintain the integrity of the idea that the extension from the 20-week should diminish each cycle. Now, I'm not saying that Ethereum's about to go to $3,500, right? I'm not saying that, but I'm saying that it could do that and it still would maintain the integrity of this model.
Yeah. Well, that would be a great Easter pump, as we say on the channel.
Yeah.
Will we be at $3,500 by Valentine's Day of 2022? That's the question.
By Valentine's Day 2022. Well, I think the hard part is knowing, I think predicting moves in the short term is very hard to do, right? And I've done that before. Anytime I do a short-term price prediction video, I say, hey, this is very dubious because we know how quickly things can change. And I think everyone sort of goes through that at some point. I do think it could theoretically be there. At the same time, I think if we go back to that, that macro chart of the log line, right? Like it depends on where we are in the cycle, right? If the bear market is hit and then we're going down, then everyone's gonna be super bearish. If we're still in the bull market, then a $3,500 Ethereum seems a lot more realistic.
Yeah,
so
of course.
I think it'll depend on how this year plays out, right? Do we go straight to the top of that line and go to an extension from the fair value of 1,000%, which would put us close to $7 or $8 trillion in terms of the entire market cap, or do we cool off for say 6 months and then continue higher later on? Yeah. So I would say it's definitely possible. And I think by the end of this cycle, for me, the end of the cycle is probably not going to be this year. If it happens, then I'll be the first to say, hey, the model shows this is the end, right? But if it's not, then I do think Ethereum can trend much higher than where it is today, and probably well above $3,000 to $4,000.
Yeah, I certainly hope
it might
so.
take it, but it could take a couple more years, right? It could take a couple more years.
Yeah.
Is my thinking on that? Like, it could take a couple years.
Well, here's been my general thinking on things. I will believe things are changed and broken when they are changed and broken. And, you know, we look a lot on my channel at the Golden Bull ratio that shows the percentage of the bull runs is a 51 to 49% ratio between the bottom of the market and the halving, and then the halving and the top of the market. Traditionally, that model is held up. That would put the end of the Bitcoin bull run September 28th of 2021. So this year. And then, of course, that would push the altcoin bonanza, you know, up close to Halloween. And so I'm not a believer in a longer cycle. I think it's going to hit it right on the head. But, you know, I think that where I think things can be different are because of all the institutional buying. I think there's a lot of data to support that maybe we won't get as deep of a bear market, but I think the time frame will probably still be around the same. I think we might see 65% drop instead of 85% drop for Bitcoin.
I would agree that we're probably, like, I think volatility is diminishing not only to the upside, but also to the downside as well, especially with institutional money. But this is just a chart to show from market cycle bottom to just show where we currently are. So right now, I would agree. I mean, it appears that we're right on track with the last cycle, but we also know that things can change. And so I think we'll just have to take it one step at a time. Right now, we are actually ahead of schedule compared to the last cycle. If you, as measured from market cycle bottom, right? As measured from market cycle bottom, we're ahead of schedule. And so I think we'll just have to see if this continues to go up, right? If we continue moving up over the next few months and Bitcoin's going to six figures, then I would agree with you that, you know, we're probably not gonna have one that like lasts. Like if we go to $150,000 in 3-4 months or something, then I would agree. Like it's not going to take as long as I initially thought. But if things cool down for a while, then we know how quickly sentiment in the market can change as well.
Well, I think the one thing that's different, why it doesn't surprise me at all that we're ahead of schedule, is obviously the pandemic, the stimulus money, the trillions of dollars getting printed. I mean, I think that by the end of this year, we're going to print $9 trillion, and that's going to be insane. So that is the reason why I think that we could get there a little bit faster. And then what I can also see is stock market crash at some point during the cycle, maybe in September. Maybe the Fed comes out and announces that they're going to make drastic changes to the rates, or they're not going to protect the bonds market or something like that. And then we could see a dramatic fall at the end of this year for that. So definitely interesting stuff though. 100%. These are some charts I've never even seen. So definitely appreciate you coming on the channel and sharing these. Any last thoughts for today?
I think that basically wraps it up. I think the best thing that people could probably do is just, like establish their positions and remember, time is on our side to a huge degree. I think time is on our side. And if we get short-term dips, take a step back and look at the bigger picture and kind of see where we are within the grand scheme of the market cycle and recognize that time is on our side.
Yeah, absolutely. And guys, also make sure, go over to Ben's channel. Make sure you hit subscribe. We'll have the link down below. And if you guys want us to have him back on the channel again down the road, make sure to drop those down in the comments below. Thank you so much for coming on today. Guys, that's all I got. Be blessed. The boy out.